Hey, what's up? I want to talk about Goldman Sachs. Uh, it is an I think it's really important when you've got a deal that you're finding a model that you want to model your acquisition after or the business that you're in right now. So for us with GoodMerger, one of the reasons that I started was kind of understanding the world of investment banking for years, being on one side of it where we were buying and selling businesses. And in a lot of cases, early on, we're using business brokers and then worked up to where, in a lot of cases, we're getting referred deals by mezzanine finance companies, which is kind of this interesting in between. And then obviously taking a company public or working with investment banks. But of all the investment banks out there, Goldman Sachs has historically and consistently been one of the most profitable. 2 years ago, they were at $30 billion in net income. And this is a really important thing to understand because it's just very rare to have a business that isn't consumer front facing. It really doesn't have a product that it has to create and sell, doesn't have to spend a ton of money on marketing. One of the things that I'm always harping here is that true deal makers would never do marketing. It's one of the things when I talk to somebody and they come into one of our programs and they're like, well, I was in this other thing and it sucked, but the marketing was really good. And the bottom line is a deal maker, just if you understand deal making, okay, I can go over here and spend $1 and turn it into 10, or I can go over here and take a risk on $1. And there's a lot of layers to that. But I love business models like this where it doesn't take competing. We're in a time right now, especially when people are fighting for marketing dollars. With the statistic just right now, and it's rising, is that marketing costs are at about 5 times raising. It's this complicated thing where it's going up as it goes up. So right now it's going up at a rate of 5x inflation. So it's 5x inflation, but that rate is also increasing. And so what that means is if you're in business models where are really, really dependent on marketing, that's going to get tougher. So you have all of these different components that make the Goldman Sachs business model such an interesting business model. And then you look at the consistency. So I mentioned 2 years ago, they were at 30 billion. Last year, about 17 billion. And you've got just massive, massive net profits without having to produce a product. And so the other side of that is, as you look towards the future, it's going to be tougher and tougher to produce products because things are getting a little frayed. Relationships with China are getting tough. We saw what can happen when there's global catastrophes like COVID and supply chains get broken down. And so what I try to figure out is, based on where the world has been recently and the potential for where the world is heading, where are the business models that do well in these circumstances? And so, you add the final circumstance to which is recession. So when the economy is kind of in a downturn, what business models do really well, and then investment banking happens to be one of those. And so, what is the actual business model? For a lot of people, they don't really know. Everybody kind of has heard of Goldman Sachs, which is another cool thing. Like when you can have that much of a cultural impact without ever spending a dime on marketing, that again is one of those models that is really interesting. If you go all the way back to the history, it was started with two families that came together through marriage, and both families were in the world of helping small businesses with financing. And with a heavy focus on accounts receivable financing, factoring financing, and those kinds of things. And then it grew, and what they're most known for now is their expertise in mergers and acquisitions. And so the interesting thing, when we started the process with GoodMerger, what I saw was there was this, and I'm representing GoodMerger today, but I'm also got the financier bank. If you are looking for financing, feel free to reach out. Um, and I will also do a video upcoming on our new Patreon. Folks, welcome. We just had a post on some income trades that I did, and shared a spreadsheet on how I kind of map out income when it comes to kind of the trades we're doing within the companies to increase the income, increase the valuations, and what we're able to sell us at. So, but back to this. When it comes to the business model of how you work with large businesses, you have these investment banks that are really focused on how can I help a business find the exact right merger for them to take over that is a strategic benefit to them. And when you get into small and mid-sized businesses, in most cases, there's not that kind of relationship with the company. The broker literally comes in almost like a real estate agent. They just find whoever's willing to pay the max price at that point, and then they sell. Well, there's a lot of work that goes in before and after that. So that's where what we get to do as GoodMerger. So when with our specialists, with each one, even we talked about before with Jay and Andrew, our most senior folks, I'm putting them on a path where next year their goal is 500,000 each. And so some people would think, okay, in order to do that, it's talking to more and more people and trying to get as many relationships as possible. And it's interesting. Really, you want to be selective, and this is one of those key points. And I think a lesson that everybody can learn. So Goldman Sachs actually told a lot of people no. They told, obviously they still tell a ton of people no, people who want to work with them because they want the best. They tell a lot of people no that want to be clients because they also want the best. And so over the years, they've told a lot of people, no, we're not going to work with you because we want to make sure that when we work with you, it's going to be highly profitable for you and it's going to be highly profitable for us. And so, we've got man, I would say even on when we're taking clients, I would say that of all the leads that come in, we may take 10 clients on for every 100 folks, so probably less than 10%. And even that stretching it, because we want to be very selective about those relationships, but then we want to have those relationships forever. Like we really want to build a relationship where it's not just we're helping you to sell this business and we're out of it. That's what most business brokers do. We want to try to catch you early on. So we're building this business up. We had one deal where it was a business actually in Tennessee, my home state. And the business was at about an $8 million valuation. But after talking to him, we knew there was a few things they could do that would get it to probably a 19 million, more than double where they were. And so most brokers would say, hey, 8 million, great, you want that? Let's go. But we said, hey, let's not do that right now. If you just make these few changes and wait just a little bit longer, those additional 2 years, yeah, we're not going to get the commission, but we get to help a client, we get to build a relationship, we get to build that trust. And that is more of the long-term vision, a long-term model that you want to have if you want to go after this type of business. So when we're working with our specialists, our goal is, we don't want you to try to build a relationship with any and everybody. The goal is to find those folks, and maybe you start that relationship by offering financing, which we do to build that relationship. But the real goal is to figure out, hey, is this someone that I want to work with long term? And then we're kind of going down two paths. we want to help them grow and maximize their valuation, which could mean finding other mergers that we finding other businesses that make sense for them to merge with. On the other end of the spectrum, it could be, hey, we're just trying to prepare for exit, and do we have other people within our kind of client base that might be the right fit, or do we need to go out and target some other buyers? But in both of those relationships, our goal is a lot more long term. It's not transactional. And I've talked before of the example of kind of even if you're taking a company public, is you want to have this long term relationship and how it can impact the other areas of the business. So I won't go into that today, but I want to get you really thinking about, how can I go deeper with clients, whatever business you're in, where even if it's retail, like how do I go deeper with the customers that I have? And if you're interested in GoodMerger, we kind of have really been focused on kind of training the new guys. We've got some new things that we're working on, but feel free to reach out, goodmerger.com. Would love to talk to more of you. We don't accept everybody. I tell a lot of people no if it's not going to be a right fit. But if you're kind of wondering about it, then a good place to start and just learn more about deals in general is the patreon.com/Ace Chapman. And we kind of get everything there from, like I mentioned, I shared some of the income-based trades that we do in the market in order to increase the income of businesses, which that can have a big impact, all the way to the other end of the spectrum to talking about a locksmith deal that's a nationwide opportunity. So cool things there. Thank y'all for popping in. Have a